It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, November 16th, 2015, cruising our way through this third week of this 11th month of 2015. And you know how we roll on our nightly newsletter. We get another jam-packed report in store for you guys and gals. Crude oil is bullish this evening with a possible trading range, so our plan is to look for buying opportunities at support levels while watching for a possible failure on the crude and a return back to the low of the range. We also have a rollover alert this week on crude oil. How about the S&P 500? We're bullish this evening on the E-mini S&P. We get a bull spike in channel and a clear sign of bullish strength after a bearish gap over the weekend. Our plan is to look for channel rotation and measured corrections for the best opportunities to get long tomorrow on the S&P 500. How about the gold? The yellow metal is bearish this evening on its way back to the lows from last week, so our plan is to look for selling opportunities using channel rotation, measured corrections, and of course short-term ranges we saw on the way down today. And of course on the euro, euro is bearish this evening with a measured move down, possible trading range this evening, which means most reliable trades will likely come tomorrow after buyer failure on the next pullback off these lows. We're looking for channel rotation up off these lows in the euro for tomorrow. As you guys can see, I get a plan for crude, E-mini S&P, gold, and euro. But before we jump into tonight's newsletter charts, I do want to remind you guys to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, there's a link right in the description of that YouTube video that'll take you right over here to our trading blog. You might find some value on our blog. Here's why. First of all, upper left-hand corner, you can grab a free pass to come out and test drive our live trade room as a guest for a day or two this week, next week, whenever it's convenient for you. Grab a free pass to attend our live trade room if you're not a member already. In the lower left-hand corner, you can register for our nightly newsletter mailing list. All I need is your name, your email address, and then when you submit that registration, make sure you check your inbox. I'm going to send you a verification email to make sure we have the right email address to keep sending you those heads ups in the future, right? Now you never have to worry about missing another newsletter. And then, of course, right below the video tonight, you'll see a spot to download all the charts you'll see me using in tonight's video. You can download all the charts from tonight's video by following that link right below tonight's video on the blog. And of course, over on the right-hand side, you can register as a trial member here at School of Trade. Not the same thing as your free pass. Join your trial membership on the right-hand side. Learn more about our 3 levels of membership, read real member reviews, and don't forget, we've always got someone standing by 24/7, 365 to answer all your questions. Remember, no question too big or too small if you're looking for support on our blog. All right, guys, now you know more information about why you should be watching this video on our trading blog. Grab your free pass, register for the nightly newsletter mailing list, download the charts, and of course, we're always standing by to give you guys some help along the way. As you guys know, we had some violence over the weekend in France. Although my heart and prayers go out to everyone affected by that over the weekend, we do move forward here and focus on the charts. You're going to hear me tonight really try to resist the temptation to anticipate reactionary procedures to last Friday, right? Again, I do not want to diminish that whatsoever, but I do have a job to do, and the charts are always going to tell me what's coming next. And it's really a challenging environment when you're charged up with emotions, whatever the case may be. But we definitely did a great job today in our trade room, really focusing on the plan and not trying to anticipate or assume, right, what type of reaction would come with the violence. One more thing about violence, though, which I think is a positive thing to see. Judging on how the markets reacted today, it is very, very clear that the strapping of explosives to yourself and killing and harming this planet of ours and these friends of ours around the world, it is clearly suffering from the law of diminishing returns. Stuff like this used to have a much more dramatic impact than it did, before. So it used to have a much more impact than we're seeing right now, right? In the good old days, if you pulled these types of stunts, we'd be seeing 4, 5, 6 days of pandemonium. And these markets really, again, I don't want to diminish what happened, but it is a I don't know whether it's good or bad, but there appears to be a diminishing return on the blood in the streets. It used to be we hear from OPEC, and all of a sudden crude price goes crazy. That stopped last year. Now, and again, my heart goes out to all of these poor souls affected by this tragedy. But it does feel like this world is taking more of a stance of we will not allow this type of bullying to be able to disrupt our world. And I think we saw a lot of that today. And you know what they always say, right? The markets never lie. How the markets react, that's what we focus on. And I think today, just the statement we saw from the S&P today, the statement that we saw from gold today, I think that really, for me as a trader who really focuses on that, it really spoke more than whatever the newspaper headlines could have said. And that is, again, that diminishing return that these terrorist groups are having right now. So that's the last I'm going to say about it today. Again, my hearts and prayers really go out to anybody who's affected by this. And I really agree with the folks that say it's really not just affecting directly the people who were within the bombing zone in France. It really affects everybody right now. And I hope that we'll stand together to voice support for our leaders and to voice support for each other, right, as we work kind of in solidarity to really show people that try to do this, that this is not going to get you more than a few headlines in the newspaper, right? On that note, we'll move forward. We have a plan to do. We have a job to do. My heart and prayers go out to everybody out there affected by it, but let's make some money this week. I think the best way to really show these people that we do not react and respond to this type of environment is to get right back at it and get right back to our daily lives, right? Keep pushing forward here. All right, guys? So let's move forward. Tomorrow we had a lot of major news on the schedule, as you can see tomorrow morning, starting right out here at 8:30 tomorrow morning. We get a lot of news on that schedule. CPI tomorrow morning, industrial production, housing market index. We get everything really running here into Wednesday, FOMC minutes, Thursday's jobless claims and Philly Fed. We're back on track for the inventory report. So a lot of news tomorrow morning. Be ready tomorrow morning, bright and early. Let's jump into some charts here. Now, starting out here this evening with crude oil. Crude oil bullish this evening with a possible trading range. So our plan is to look for buying opportunities at support levels below while keeping a close eye on a possible buyer failure and a return back to the lows of this range. Now we can see a major bull channel on the way up today on this chart, which definitely tells us we're going to be, we're definitely going to give the buyers the benefit of the doubt. But you'll notice that somewhat sideways movement here we're seeing right now. We're not seeing new higher highs as we end the day. And, we look back in time a little bit and we can see we're really just right inside of Friday's range here. So we're definitely going to give the bulls the benefit of the doubt right now. The bears are going to have to prove it. But I'll tell you, though, this is an environment, it's teetering here on being nothing more than a trading range. And I'm going to repeat this again, which I said earlier on this month. We have yet to have more than a day and a half of bullishness on this market this entire year of 2015. So, I've said this in the last few weeks. Every time we seem to be bullish going into a Wednesday inventory, we seem to find a way to collapse right back down this week. Will this be different? I don't know. I'm going to be waiting for proof just like the rest of us. But right now, here's what the chart tells me. Right now, we have a bullish channel finishing the day today. There is a bit of a spike in channel in there, right? Spike up, channel up, A, B, C, D. So we get a measured move waiting for us overhead as resistance around that 4260 area. But in all reality, it's really better fit here as a bull channel. And of course, channel rotation is the main clue right now. So definitely going to give the buyers control because of that. The second thing, though, that we see on this chart, we rolled down to 40.15 area. We push higher here up to 42.21. Maybe the range is somewhere like this. That would be the next best thing. But, when I look for a trading range, I look for indecision in both directions. I look for double tops and double bottoms. Now you can see that double bottom right here. So the low is really easy to peg. It's that high right now that really is difficult to really define, right? Is the high going to be around this 41.75, right? Is that going to be the high, 41.75? You know, there's no double top there. Is this going to be the high at 42.21? Again, there's no double top there either. So we really don't have much of a high in place yet, which, you know, by default now tells me we're going to have to wait for more evidence, right? We're going to have to wait for more proof on this. So I can't quite call this a range-bound market. I have to give the bulls the benefit of this doubt right now, and that means the bears are the ones that have to prove it. Here's what I'm looking for tomorrow to show the bears are proving it. I'm expecting to see a correction off this high, right? We finished the day strong, but not that strong, right? Lower highs, that tells me buyers are not holding positions now into the close. We expect to see a measured correction back down, right? So we got A, this really now that we've seen a little bit more here, that becomes B. Keep rolling with it, that becomes C. And so now we can easily see here now, draw that measured move lower here, right? And now we're starting to get the D point. Again, I haven't updated this yet, but I'll update it for you right now, right? That's going to be our measured move. So we're expecting that, right? It would be very irrational if we didn't see some bulls taking profit, some bears trying to find bargains. And so we assume this price will come down off these lows, right? Measured correction. What we do from there is where we're going to see the best information here tomorrow. So assume now we're going to see that A, B, C, D measured correction. We go into this trading range. Now the sellers have to hold off the buyers. That's what I mean when I say the buyers get the benefit of the doubt, right? This bullish move higher today gives those buyers the benefit of the doubt. The sellers are the ones that have to hold it. And in my opinion, that moving average becomes a very, very easy to use tool. In other words, after we break down off these highs, can the sellers keep us below that moving average? If that's the case, that's strike number one against those buyers. The next strike, strike number two, and they may only get 2 strikes on this one, is that we're probably going to see after that measured correction, price will jump up here. The second strike against the buyers are going to be if they can't hold that pullback. And that's where I'll be looking for the selling opportunity tomorrow. If we see the buyers struggle to keep that price above the moving average and also wait for those buyers to buy that next pullback. Again, we expect to see this price come off that high. I also expect to see buyers enter the market here. That's all fine and dandy. What I'm looking for now is can they hold that next pullback and send it higher? If they are, we'll obviously continue to buy those dips and follow that trend. The big concern, though, for the buyers should come if they can't hold that pullback, because we know where their stops are going to be. There's going to be a few of them, and once we run those stops, sellers are going to attack this thing, and that will send price down to that 40.53 area for one target, and then most likely all the way back down to that 40, which will complete that range rotation from low up to high and then back down. Again, wait for sellers to prove it, right? That's the key for tomorrow. And if you don't know what I'm talking about right now, that's going to be a really big clue for yourself that we need to get proper education, not just the terminology, but what we're actually going to be looking for the measured correction off this high. The buyers should take it. If they fail, though, that's where we know these bulls have been beat, and this will become a range-bound market. One last thing about crude oil. We do have a volume rollover coming between the 12.15 and the 116 contract. I'm going to use my market analyzer here in NinjaTrader software, and I'm going to be comparing the volume on the 12.15 to the 116, and as soon as we see that volume roll over to the 116, I can't believe I'm saying 116 right now, but that's the next contract in this rollover schedule for the monthly rollover on crude oil. So do watch that. We typically get those on Wednesdays, the inventory day. So probably not going to be tomorrow, but I've got to always kind of keep my head on a swivel watching that volume roll over. Remember, crude oil is always a little bit tricky because it rolls over every month, but we typically see around the 18th of the month. You can usually kind of set your clock by that for rollover. All right, guys? So heads up on that for tomorrow on crude. Now, to a market that is not showing any sign of a range right now, here we have the S&P 500. S&P is bullish this evening with a clear spike in channel and clear buyer strength after that really not surprising gap down. And this is the statement I was talking about, right? That bearish gap over the weekend, we talked about that this morning. Boy, was it surprising to see crude come off those highs? I mean, when we saw that market open up on crude, we thought, oh boy, they're reacting out of fear right now based on this weekend, right? But all we had in the trading this morning was selling opportunities, right? All back down. They, of course, later took it back higher. But what a statement this S&P is making right now. We gapped down at the open over the weekend, right? And then almost as if it was on a string, just whoop, right back higher here. It feels like all the bulls that missed the move a few months ago, it feels like they just bought into this pullback from last week with a vengeance. It feels like a statement, right? We were very bearish finishing up last week, and this is exactly what I'm always referring to when I say let the chart tell you what's going on. Don't let the news media, don't let any perma bears get you down on this. This is a very bullish environment right now. So our plan is to use what we always use for a trending market. Channel rotation, measured corrections, counter trend traps, right? So we're looking for that pullback to be very deep on this bullish spike in channel, right? Spike in channels on the way up. We could pull back all the way to the 2021 area. So this might be a very deep pullback, but the buyers are definitely have the benefit of the doubt right now, and the sellers need to prove they can hold off those buyers after the next pullback, right? We learned about seller proof on the crude oil chart earlier in this newsletter video. Now what you can see here is really we have basically three components on this chart. The first component is we can see this just very dramatic, almost like a rubber band, just snapping this thing back higher here, and this bullish spike in channel. Spike in channels are great because you really wouldn't want to draw the channel up like this. It doesn't look very good, right? That spike in channel really looks gorgeous. So spike in channels definitely in play. Remember, spike in channels are strength patterns, and we know that when we see a spike in channel, we know that screams strength, so stay to the buy side, but we also know that a bullish spike in channel can correct all the way back to the base of that channel. So what we'll look for is a measured correction back down. This is where you've got to really be careful because you're not going to get a very clear buy signal here. The bulls will usually be, most of the bulls will have given up on this. What you want to wait now for is wait for those sellers to try to sell that next retracement. You know where their stops are going to be now and buy right into those stop losses. So that's ultimately where you want to be looking for that buying opportunity. You're basically buying. It's a counter trend trap. Most spike in channels, once they do give us that deep correction, you're going to get that snap back after that measured correction. What makes a bull spike in channel so tricky, especially for new traders, is that it's going to feel very bearish during that correction. And I can't say it's not going to collapse and go all the way back down, right? I mean, I can't predict that. But what I do know is that in a bull spike in channel, I know where the most reliable trade is going to be. That's all I can do as a professional trader. I can't predict tomorrow, but I do know where the most reliable trading opportunities are going to be, and that's going to be after a deep pullback, deep correction, measured correction, and then catch those sellers, right, who are thinking this is a bearish reversal now, right, catch them trying to sell into that correction, and that's where you're going to get the easy money out of this move. So now we go back to the chart right now. There's your bull spike in channel. We know that price can pull back quite considerably here, right? I mean, it can really pull back pretty darn deep here. So now we expect to see that measured correction, right? Difficult to tell how deep it will go, so keep it in mind, right? It could go as far as, right, this 2021 area here, and then sellers try to sell it, right? They get run out of that trade. That's where you're buying that deep correction, right, after that spike in channel. That would be the best case scenario. What we'll be doing here, though, is using that channel low as our first line or first opportunity. Channel rotation, right, from the low up to the high, back down to the low. I'm not interested in selling right now, but short-term sellers could probably get a little bit of profit out of that going down to that low. But that's where we're looking now for our next buying opportunity down around that low, right? And we're going to wait for proof on that. If we do pull even lower, which is usually what happens on a spike in channel, spike in channels are classic scenarios where there's so many buyers in this market that what usually happens is those buyers, they start taking their profit, right? They've had a big run up, right? Second big thing here is this measured move. So we're right up at that measured move right now. We're right up at the channel high. We expect to see some buyers taking profit on this, and that will send that price lower. And so that puts us now buying the low of the channel, buying the trigger zone, right? Buying the third piece of the puzzle, the prior trading range from 2089, right, to 2020. And so really I would expect to see that measured correction lower, get down into this trading range area down here, and then look to catch those sellers sleeping, right, and buy that sucker right back up. Again, if you're a bear right now, be careful, but you're probably going to get a chance here to be a little bit bearish on the way back down. The tough part right now is how do we know how far it's going to go, right? It's much easier for me to wait for the price to get down, right, and then start looking to buy into those seller stop losses, catching those counter trend traps, right, on the wrong side of the market tomorrow. Okay, don't forget that channel rotation, measured correction, that trading range down at 2028 down to that 2020 area. That looks pretty darn tasty here for that measured correction, and then back up we go. Either probably mid to late morning tomorrow morning, right? That'll be the best time to be looking for tomorrow on the S&P. We'll take a look at that a little bit closer in our trader tomorrow. Don't forget, guys, we'll be watching all these charts live in real time tomorrow morning with all of our students here at School of Trade. How about some gold? Gold is bearish this evening on its way back to the lows from last week. So our plan is to look for selling opportunities using channel rotation, measured correction, and those little short-term ranges that we made on the way down today. Those little short-term ranges you see are going to make for excellent areas to catch the buyers on the wrong side of the market tomorrow. Friday's low is at 78.2, and that's going to be an easy target for the bears tomorrow. But the most reliable trades will come after a bullish correction higher, possibly, like I said, into these little short-term ranges that we saw today, right, that formed on the way down. This most recent one here looking very, very tasty. Now, remember back from last Friday how we said that range rotation, expect that price to go higher so you could sell it back down? Wasn't that a beautiful setup from last Friday? Just really remarkable how those range rotations really, really make it easy on us to expect that reversal last Friday and then right into a great selling opportunity today. So really just a beautiful example of how last Friday's scenario, which we talked about in the last newsletter, really set this whole thing up. And if you follow my newsletter, you know exactly what I'm talking about. Now, we get to trade with the chart tells us for tomorrow, so we definitely know that we have a bearish channel here on the chart. We do have a break of that channel, so we're looking for a measured move on the way down. That'll take us to that previous low of day. We may go higher here before we go lower, though. We do know one thing's for sure, though. That channel tells us we're bearish. We combine that with these trading ranges. You'll notice that's where the volume's piled up, right? That's where the volume is piled up. And so this is a great example where we don't know exactly where we're going to be looking to sell short tomorrow, but we know the best. Again, I can't predict the future, neither can anybody else, but I do know where the highest probability trades are going to be. I do know where the most reliable trades are, and the most reliable trades right now are going to come after a measured correction back higher, and then just like we talked before, right? The bulls confuse this as being a bullish market, right? They try to buy that next pullback. We know where their stops are going to be, and we'll be waiting there to sell right into those stop losses. So the name of the game right now in the gold is measured moves down, measured corrections back up, channel rotation, and those delicious counter trend traps, right? You gotta love catching, in this case, catching the buyers, right, on the wrong side of the market. Now, don't forget, there are 3 ways to trade short after that correction. If we correct back higher, the first way is going to be a reversal pattern. Draw that trend line, wait for the break, wait for the stop run, right? And you've got your reversal pattern. The second way to do this, and of course we teach all this stuff to our students here at School of Trade, the second way to do this is going to be to wait for that measured correction, wait for the buyers to buy the next pullback, and simply sell into that buyer failure. That's my favorite way to do it. That'll get you in a little bit earlier, right, than usually those reversal patterns will. And then let's not forget the conservative way to sell short, right? You wait for that measured correction. Again, I don't know how high it's going to go. I don't need to know that information. What I do know, though, is how to measure the correction, right? Let the buyers take it, because when they try to buy that next pullback and they fail, now we know we're back on track to the downside again, and we can sell with wave patterns on the way down. So whether you want to be in early or in late, stay patient here for that measured correction back up off those lows and wait for those buyers to get caught on the wrong side of the market. Now, we're going to wrap up here with probably the most challenging market that we're going to get tomorrow, and that is the euro, the 6E, not to be confused with the currency pair, right, the Forex pair. This is my currency future, the 6E contract. It's a transparent version, right, of the Forex pair. I'm not a very big believer in trading Forex. It's not a very well-regulated market, and it's extremely expensive for traders of small accounts, right? Think how much 3 to 5 pips really costs you in that spread, right? $30 to $50 in spread, whereas I pay $5 commission on the futures contract. Don't even get me started on the many tax benefits that we have in the United States of trading futures over Forex, right? Forex will require you to do a whole other tax return, right? Whereas trading futures, I get paid like any other job with a 1099 at the end of the year. Talk to your CPA about that, or call the office and I can give you more information about the many reasons why I chose futures over Forex. It's a very smart business decision if you got the right information. And unfortunately, the Forex brokers are not going to tell you this. So, euro is bearish. We have a measured move down and a possible trading range this evening, which tells us the most reliable trades will be after buyers fail to buy pullbacks after we rotate back to the highs of that channel. Now, here's where we are. This is a very interesting scenario we're seeing right now, and this could definitely be a difficult one for us tomorrow. 2 real important things that I see. First of all, we have the bear channel. Actually, 3 important things. First of all, we have the bear channel. And of course, since you guys are experts with me on channel rotation, right? High to low, low to high, high to low, low to high. So we're expecting right now, since we're down around that low, we're expecting price to rotate back to that high before it makes its next descent lower. That's where we expect to see the best, most reliable trades. The second piece of this puzzle is you can notice this is measured. I mean, this is very symmetrical coming down. We've got, count them, 1, 2, 3 symmetrical legs. Yeah, if you're wondering, that doesn't happen very often. That definitely tells me we are in oversold territory, if there really is such thing. There really isn't. This market will keep going lower as far as it wants to. But the reality is, though, is that we anticipate that self-fulfilling prophecy, right? Technical analysis, that's what we have to use. So we expect to see some buyers coming in to buy bargains. We expect to see some sellers taking some profit. And so we expect to see price go higher here. What we know is we know that because of this measured move down, it's going to be lower probability to be a seller here. We know that because of that channel rotation, there's no reason why it can't keep going lower, but it's lower probability until we get back up to the high of that channel. Now, speaking of the high of that channel, let's go into the last piece of this puzzle, which I think is the variable that causes this to be a little bit of a challenging environment. Here's what I'm seeing right now. I'm seeing a very small little window here now, and I'll try to mark it up here as best I can. Well, you'll notice that little area between the high of that channel and the low of this trading range. Now, just like we talked about on crude oil, we don't have a double bottom. We don't have a double top. So it's really, this is a questionable range, right? It's definitely a questionable range. I can't really easily say this is a trading range. It looks like one, but guys, I've been doing this long enough to know you got to get proof. You can't assume anything in these markets, right? They're going to take your money and make you wish you would have waited for proof. So here's what we know. We know that right now the best trades are going to come after we come off that low and up to that channel high. But hold on, that's where the record skips, right? That's where we say, well, wait a second. Now we're going to be selling into the low of that range. I don't like the idea of that. I do not like the idea of selling above 0704. Again, we don't know enough yet to really call that not a range, right? It's kind of that variable, like I said earlier. So here's what I'll be looking for. I'm expecting to see some profit taking. I'm expecting to see price come up off these lows, get inside that range, and rather than just blindly selling it, I'm going to wait for the buyers to try to buy that next pullback and, again, catch those buyers on the wrong side of this market. That will kind of mitigate the risk of this basically going up, pulling back, and wham, right, going higher all the way up to that range high. And that'll be the next plan, right? So we go higher. The buyers try to buy the pullback, they fail, we sell into it, and like nothing happened, we're now finishing the next leg down, right? Channel rotation, the next symmetrical rotation down, etc., etc. What I'm almost expecting, though, is because of that little channel low there, I'm almost expecting this price to get a little bit stuck right here. And if those sellers, right, if they can't get the job done, this is going to go launching all the way back up to that 0757. So we'll be keeping an eye on that tomorrow. So just a heads up, watch out for those sellers failing because we're trying to sell in that 074. I'm looking for buyer failure to sell it back down. And again, if those sellers can't keep it contained, it's going to launch right back up to that 0757, right, for that euro tomorrow. All right, guys, wrapping it up. You know the plan for the euro. You know the plan for gold, right? We don't know how far that correction will go. So we're going to wait patiently and then look for buyers to fail on this gold to keep selling. The opposite is true on the S&P. You might have a little bit of a shot here as a bear, but wear your helmet if you do it because this market is clearly bullish. I'm waiting for channel rotation. I'm waiting for measured correction, right? I'm waiting for deep pullback for that spike in channel, right? Give me that deep pullback. That's where I'd really love to be a buyer on the S&P. And then, of course, on the crude oil, another one of those kind of variable ranges here right now, right? I really won't. I'm not going to say whether or not I think we're going to go higher or lower. I think we definitely give the benefit of the doubt right now to the buyers, make the sellers prove it here on the CL, and we'll go from there tomorrow morning. We'll see how this market looks tomorrow morning when we open up live in real time tomorrow morning in our live trade room. And on that note, I will wrap things up here with you guys. A little bit longer newsletter than I would like it to be every evening for you guys. I know you guys' time is valuable, but I felt like it was important to talk about what happened over the weekend. I didn't want to completely ignore it, right? Because it definitely was something that I think affected everybody. And again, my heart and prayers really go out to everybody who's affected by this all across the world. Before I let you guys go, I want to encourage you, share this information with a friend. Send me some feedback. My email address is jj@schooloftrade.com. schooloftrade.com. Give me a thumbs up on the video, right? I would love to have your support on our YouTube video. And don't forget, guys, we always have someone standing by 24/7, 365, as well as a great free trial here at School of Trade to answer all your questions. Guys and gals, you're going to learn more with me in 1 week on my trial than you do anywhere else on the interwebs, and I hope you give me a shot to earn your business here as a new student at School of Trade. My name is Joseph. Thanks so much for being here today. Be well out there. And again, like I say every night, be nice to each other, will ya? We're going to do it all again tomorrow. My trade room opens up at 8 a.m. Eastern Time. Our newsletter goes out tomorrow evening at 8 p.m. Eastern Time. Be well out there, guys and gals. Feels good to be alive right now. Definitely thankful to be healthy every day and filled with opportunities. If the events over the weekend didn't remind us of that, I don't know what does. All right, guys. So have a great week. Have a great evening. I'll see you first thing tomorrow. Be well out there. Adios, amigos. Bye-bye for now.